Today on the channel, guys, we're going to be talking about the 3 things that you need to do to have better entries. All right, roll the intro. Traders, what's going on, guys? Welcome back to the Top Trader channel. I'm the head trader here, Cleveland Bishop. Hope you guys are having a good week so far. It's Tuesday. U.S. session is just about to wrap up, and it's been a really flat day, at least for the U.S. markets and a lot of the European markets as well. The only 2 markets that we saw kind of moving a bit was the Australian dollar and that NZD. You guys can see that there are 2 massive sell-offs happening today, but we'll be talking about that a little bit later on this week. Today we're going to talk to you guys mostly about entries. All right, entries are really one of the biggest things that traders prize when it comes to the business, right? They say, I have perfect entries, or when do I get in, when do I get out of the market, right? That would be take profit, but mostly we're going to be breaking down those 3 variables. Okay, so guys, if you're new to the channel, make sure you are subscribed so you guys can get notified all the times we're going to be releasing content after this video. And if you enjoy the content, folks, like the video for your boy. I appreciate it. So the steps to entering into a trade, right? So usually when a trader starts to get into the business, they go straight into execution phase, right? When they're trying to rationalize when to get into the market, all right? How do they capitalize on the profits and the moves that they see the market doing, right? And you guys, if you know me, I have a massive problem with that. I think first you need the knowledge. I always use the same analogy. You can't create a chess strategy if you don't know how to play chess, right? So getting into the market means that you technically have a strategy, right? And that for me is one of the first problems when I see a trader trying to figure out exactly what they need to do, right? And this is really a breakdown on the 3 things that you should really be avoiding before you try to start entering into positions. Okay, so the first one is just that, the edge. All right, again, if you don't know how to play chess, you can't create chess strategies. So if you don't know how to trade FX, you can't create FX strategies, all right? So when you're trying to enter into a position, you basically have coined an edge. You have an advantage over the market, right? And so anytime you have an advantage over the market, you have been able to quantify, hey, right now I need to get into the market because I know that there's a higher percentage likelihood that the market is about to do this or that, right? That's what an entry is. An entry is a really massive overarching idea that really is almost your entire business model. You like think of it as, I used to use an analogy a long time ago, as almost a sniper, right? Pulling the trigger when you're maybe shooting some kind of target or something like that is just one step. You have to rationalize wind direction. You have to rationalize how far away the target is, the type of bullet in the barrel, right? There are a lot more things than just pulling the trigger. Pulling the trigger seems like that's the business of shooting a target, but there are a lot of things encompassing that. Same thing with an entry. There are many variables that you need to assess and understand before you enter into the market. So if you don't have those lined up, all right, and if you don't have a process, then definitely, folks, you're gonna have a very, very hard time figuring out when to get in and out of the market. Okay, so that would be my first tip. Create a process, create a structure that allows you to understand when markets are gonna be in that phase of predictability. And so I will go back and talk a little bit more about technical analysis. A lot of traders will use technical analysis and create entry rules around technicals. But remember, an edge is something that you can truly understand, right? I don't think an edge is, hey, my moving average is just diverged, right? Or I have a bearish engulfing candlestick pattern. To me, that doesn't truly quantify that I'm gonna have markets run in my direction. I need a real reason, right? So for us, an edge would be something like, hey, we see inflation's ticking up over in the Canadian dollar. We think that we're gonna get a price move of over 200 pips, right? A 4% price move. We think that's gonna price into the market. Now we have a directional bias. Now we have an idea of where we think the market's going to go. Okay, we need a strategy to get us in and out. And that's one of the most important things about the edge. The edge doesn't actually tell you exactly where to get in. Again, it just literally gives you a directional bias. And when anytime any of my traders are trading, that's the first thing we try to figure out. Hey, what's our general idea as to where markets are gonna go? Screw the entry, screw the take profit, and screw the stop loss. Where do we think this directional move is going to happen? Because that's really what we care about. Now we just have to create some type of structure to get in on that market move, okay? And so that's really what's next, okay? The dynamic price zone. A lot of traders, when they're trying to get into the market, they usually have an exact precise level. I'm gonna get in on the euro at $1.15 and 35 pips. Anytime you do that, I want you to understand that markets are extremely dynamic. And what a dynamic market means is that there's not just one single place that you're going to see synergy, all right? And synergy is that directional move that you're looking for. Okay, so here's the good thing about trading. Here's the good thing about FX. Anytime you see a directional move in the market, that means the majority of market participants traded in that single direction. Okay, so think about that. Are all of those traders going to get in the market at one exact price point? You may get a tremendous amount of momentum in a certain price area, but it's not going to be a certain exact price level. Okay, so there isn't truly anything called a perfect entry. There is a zone. Anytime we create entries, we're trying to rationalize the area that we need to execute and get in on markets. And for us, that just allows for a more easy process to execution. Okay, when you have that exact price level, what happens when markets break above that level? You're usually sitting there like, oh, I missed a trade, right? But when you have a price zone, a well-defined price zone, okay, don't have the price zone be 200 pips wide, because then again, you have too much of a loose area that you're going to basically claim, a momentum. All right, have it to be well defined. But when you have that well defined price area, it gives you a little bit more structure and a little bit more of a process to be able to say, hey, let's get in the market in this general area. Okay, so guys, look, I know you want the perfect entry. There's no such thing. Create the perfect zone, all right? Widen things out of it. Rationalize, hey, if I get in the market on this Euro USD from $15.50 to maybe $15.75, I'm happy, okay? And then have the same thing with your targets, have the same thing with your stop losses. I know a multitude of traders that would let the market run literally 4 pips away from their target and not get out of the market, literally because it didn't hit off exactly on their price target, right? So have the zone. The zone will allow you to liquidate in the event that you have a take profit, and it'll allow you to liquidate in the event that you have a stop loss, but it also allows you to get in on that move as well. All right. And so finally, it's really simple. You need to have a set of conditions. This is the process I was talking about earlier. Okay. Hey, look, if markets do this, then I will do this, right? If markets do that, then I'll do this. But there needs to be a set of those. Don't just have one scenario where you say, hey, if markets do this, I'm in the market. Okay. Usually there needs to be some type of synergy, some type of aligning of events that happens that give you a highly predictable outcome. But even still, a highly predictable outcome has a chance to lose. Okay. So whenever you say, hey, I only take highly predictable, very, very profitable trades, that's kind of that's nothing, right? That's a nothing burger, right? Who says that? All the Republicans guys say that. I've been watching a lot of CNN lately. All right, there's nothing there when you think of stuff like that, okay? You guys need to rationalize that a set of conditions are, again, nothing more than a unilateral agreement of a directional move, but even still, you can be wrong. But at least you should give yourself a higher percentage likelihood that you're gonna make money, all right? Over 50%, okay? And even still, hopefully your winners are larger than your losers, but that's another conversation. Okay, so guys, again, when you're creating entries, understand entries are the business. Okay, that is the edge. That is you basically saying, hey, markets are now in my realm of predictability. That's a big thing, and there's a lot of other things that come along with that. But when that moment does happen for you, it's not going to be one specific price area where you get in the market. There's not going to be one specific price level when you get in the market. It's just going to be an area, okay? And that area is going to give you a little bit of time to kind of get in on that move. Now, obviously, if you're in a lower time frame, again, that area will be more specific. But if you're swing trading and if you're looking at, the hourly, 4 hour, daily, then again, you have a lot of time to execute on that move, as long as, again, you don't have forever, but you should be able to execute within a certain area. And then finally, have a set of conditions. Have a set of if-then statements that compile to saying, hey, if this happens, and if this happens, and if this happens, then I'll execute. All right, that's how all algorithmic strategies are made. And currently right now in our market, those are the most profitable strategies. Okay, so guys, those are the entry rules. If you guys have any questions, let me know. We have a multitude of entry rules, and we have a very, very quantifiable edge in our trading community. If you guys want access to that, click the link in the bio. I'm going to be excited to have you. All right, again, we're going to be shooting out some more content later on this week on the channel. If you have any questions, let us know. Like the video. I'll talk to you guys soon.